Everybody, welcome back to the channel. In today's video, I'm going to be discussing exactly why MU and the AI stocks are about to collapse, specifically this week. All right, we're also going to be looking at some of the other stocks that I've mentioned in the last video since it's been a long while. So let's dive right into it. Right off the bat, we got the SPY futures. And so far, everything is red. As you can see, the market is down by negative 0.54%. The Nasdaq negative 0.62%. We hit a high of 75.40 before Friday turned out to be a sell the news event. Like the market was running higher and higher in anticipation of the meeting between President Trump and the president of China, and it turned out to be a sell the news event. And then the excuse that the market makers put out that caused the semiconductors and a lot of the AI stock to fall was that the chips weren't discussed during that meeting. At least that's the excuse that they put out to gap everything down overnight. Okay, so right now, again, things are red, and I think they're about to get a lot worse. Now, critical levels to watch for the SPY specifically is going to be the previous all-time high of 7,035. How fast are we going to get down there? I'm not quite sure, but the good news is that it looks like this is the beginning. All right, this is the beginning of a big move, and this right here looks like a bearish engulfing candle. We might get 1 or 2 dojis before we really fall down to 7,200. Okay, so just be on the lookout for that. For anybody who's holding short, I think this move down is going to get a lot bigger by the end of this week. All right, now let's discuss the AI stocks. First and foremost, MU. Now MU looks like this. I'm going to clean up the chart, but I want y'all to just look at it from the daily first and foremost. It went from the highs from the lows of 111 all the way up to 818. And what it showed at the top, it looks to me like an island gap reversal. I'm gonna erase this line. All right, we have the exhaustion gap right there, followed by a doji, followed by another doji, more dojis, until on Thursday when it formed a bearish pennant intraday. All right, but the island gap is right here. This the island, the gap up followed by the gap down between Thursday and Friday, and the move down was very predictable, very predictable. The same structure showed itself not just on MU but also on SanDisk and on Intel, which we will talk about very soon. So this is what happened Thursday, and I did take a trade on it between Thursday and Friday, and covered my puts at 731ish. All right, but the bearish pennant was there, and then the breakout in the last 5 minutes was also there, which led to the giant gap down. All right, now next level of support, which is about to get breached, is 706. I think it's going to play games here for a while, maybe a day or two before we really go lower. Like the bottom, the price target that I have for this one, that I still have for MU, is around 650. Maybe even eventually it's gonna get a lot lower than 650. But again, for the short term, for this week specifically, 650 isn't too much to ask, which is the gap right here. That should get filled either between now and Thursday. That gap is gonna get filled before we see a dead cat bounce, and then we make another big leg down to take care of the gaps right here at 575 right there. All right, so there's a lot of gaps that the stock left behind, and this is a bubble. I do not believe that we're gonna go higher than 818. In my opinion, that right there, this is the top, right? And then what happens next is just gonna be brutal for anybody who's holding and hoping for a bigger move to 1,000. All I can say is be careful, and only time will tell whether I'm right or not. All right, but again, this is MU, and I think we're gonna go a lot lower. Now, other reasons why I think the market is really gonna take a dive is because of the inflation reports that were reported last week. Let's take a look at them. So this is the CPI, yeah, and as you can see, we've been increasing slowly from the lows of 2.4 in February, and then we had a jump to 3.3, and then we had another jump in April to 3.8. This is not good. Whenever inflation tends to rise, assets don't like that very much. And the same thing can be said about the PPI, the producer price index. It's been rising since for the entire year. It's just been rising and rising. 3.1, 3.4 February, then it jumped to 4.3, and then a really big jump between March and April at 6%. And if you look at it on a bigger time frame, this is how it's going. Like, inflation is just climbing and climbing. And the last time we've seen that something like that happen, the whole market took a massive dive and we sold off throughout like all of 2022. Just saying. All right. If you disagree with what I'm saying, again, y'all can drop it in the comment section and we can argue down there if you want. And you can tell me why you think otherwise and why the market is and why the SPY is gonna go to 8,000. Let me know in the comments and why you think that's the case. All right, but this is what I'm seeing, and this is why I'm sharing this information with y'all in today's video. Now, I told y'all that I'm gonna discuss Intel, and Intel, that one I've been bearish on it for a while since it crossed $100 per share 2 weeks ago, and then 110. It just kept pushing higher and higher, and I was patiently waiting for this thing to show weakness and to start slowing down. And this was the other stock that I was shorting along with MU to the downside. The price target that I had for Intel since the 12th, May 12th, was $80. All right, ever since that initial gap down between 130 and 123, right? And so far, we're moving that way. For this week, I think 95 or 96 is where we're gonna go. 80 might take a little bit of it might take some time to get down to 80, but eventually it's going to get there. And plus, the previous all-time high from 2001 is somewhere around $75, and I definitely believe that that's going to get tested at some point. It might not be this week, it might not be next week, but definitely before the 19, I expect to drop down to like 80 before June 19 for sure. In this fiscal month right here, I think we're gonna make that drop. Okay, so that's my thoughts on it. There's 8 minutes. Yeah, the video is 8 minutes long. Let's look at another stock that I think is gonna make a big move down. BE. Now, BE looks like this. This is another bubble. They had a big push from 130 all the way up to 300, and it's showing weakness at the moment. Intraday on Friday, it showed a bearish Bennett, just like what I just showed y'all with MU, right? The bearish Bennett is there. It was cooking throughout the entire day Friday, and then we had the breakdown right there in the last 15 minutes of market hours on Friday. All right, and what's supposed to happen next is a big push down, a move all the way down to around 200 and at least 250, at most 230, somewhere right here. I'm gonna leave the charts like that. That way we can get back on there later on in the week just to see how we did. But so far, this thing is there's a gap right there, and I believe we're going to make our way down to that level. Okay, now let's check out a stock that is really fighting hard to stay strong. Apple. Now, Apple, if you were bearish last week, this was the worst stock to try to short because it's been showing a lot of strength and a lot of resilience. And to anybody who is bearish on Apple and is mad about why the stock is not falling, the only thing I can tell you is just leave it alone. Just leave the stock alone. All right, other stocks have a lot more room to the downside, like the semis and the AI stocks. All right, Apple is a juggernaut, and ever since it crushed earnings, ever since it crushed earnings between 270 and 282. It's just been on a tear. Like, there needs to be some type of bad news, just something, to bring the stock back down to 290 before panic and fear really kicks in. But as for me, I am not gonna try to short Apple. Intraday, it does provide some opportunities sometime. Like on Friday, there was this ascending triangle right there, right? So it provided opportunities for a day trade intraday. But if you're trying to swing, I think you're gonna get crushed. So just be on the sidelines, be very, very patient. Yeah, that's really all I could say about that's really all I could say about Apple. Now, the last stock that I'm gonna discuss in today's video is popular among us traders, is Tesla. And Tesla is down ever since it had this structure right there. Very sloppy, all right? But the gap down really helped for anybody who went short after seeing this. Yeah, it's not looking too great. It's not looking too great. It's on its way back down to 400, which is the next level of support right here. I gave y'all a warning before about Tesla. It went a lot higher than I expected, but I drew something that looked like, let me erase this. I drew something that looked like this, and then when it was at around like 360, I told y'all to watch it for a retest of 400, but be really, really cautious because it could be a trap, and we might see a move that looks like that, right? So it went a lot higher than I thought it could, but ultimately in June, it looks like it's gonna end up where I really, really thought it was gonna be. So we might see that. Be very cautious. Again, guys, take your time and choose your entries wisely, manage your risk, and that is pretty much the end of the video. Again, I am not your financial advisor. I repeat, I am not your financial advisor. So do your own research and make your own decisions, all right? Again, if you don't like anything that I've mentioned in this video, if you have other opinions on why the market is gonna go the other way, I would love to hear your thoughts in the comment section below. And don't forget to follow me on social media at Patternology Lab on Instagram and on X. And lastly, don't forget to like and follow for more.